Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 19th, 2025, and we're diving into the first quarter financial results of CBAK Energy, a leading lithium-ion battery manufacturer based in China. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. CBAK Energy has been a significant player in the battery manufacturing sector, and their latest report provides some interesting insights into their current performance and future prospects.
Revenue and profitability overview. Let's start with the top line. CBAK Energy reported net revenues of $34.9 million for the first quarter of 2025, which is a significant 41% decrease compared to the same period last year. John, what are the main factors behind this decline?
The decline in revenue is primarily due to the transition at their Dalian facilities. They're upgrading their product portfolio from the older Model 26650 to the new Model 40135. This transition has temporarily affected sales as customers are in the process of testing and validating the new model. However, the company anticipates a gradual recovery as this process completes.
And how has this impacted their profitability?
Gross profit has also taken a hit, dropping to $4.8 million from $18.8 million last year, with the gross margin shrinking from 30.9% to 13.7%. This is largely due to the reduced sales volume and the costs associated with the transition. Consequently, the company reported a net loss of $1.58 million compared to a net income of $9.8 million in the previous year.
Operational challenges and strategic initiatives. It seems like CBAK Energy is facing some operational challenges. Can you elaborate on their current strategy to overcome these?
Absolutely. The company reported an operating loss of $2.86 million, a stark contrast to the $10.3 million operating income from last year. The key challenge is the transition from Model 2650 to Model 4135 at their Dalian facilities. However, they are optimistic about a recovery in the second half of 2025 as the new manufacturing lines for Model 40135 are completed and customer validation is finalized.
What about their other facilities?
The Nanjing facility is performing well, driven by strong demand for their flagship Model 32140. This facility is expected to continue its growth momentum, which should help offset some of the challenges faced at the Dalian site.
Financial position and future outlook. Let's talk about CBAK Energy's financial position. How are they managing their resources amid these challenges?
CBAK Energy has a solid asset base with total assets of $311.5 million. However, their cash and cash equivalents have decreased to $4.5 million. The company is in the final stages of securing a long-term order from a key customer, which could significantly bolster their financial position and provide a much-needed boost to their revenue stream.
What is the management's outlook for the future?
CEO Zhiguang Hu has expressed confidence in a gradual revenue recovery as the product transition completes. The company is also focusing on expanding its market presence with advanced products like the Model 32140, which should drive future growth.
Key takeaways. In summary, CBAK Energy is navigating through a challenging transition period with a significant decline in revenue and profitability. However, their strategic initiatives and strong performance at the Nanjing facility provide a positive outlook for the future. John, any final thoughts?
CBAK Energy's current challenges are significant, but their proactive approach to upgrading their product line and securing long-term orders could position them well for recovery. Investors should keep an eye on their progress in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on CBAK Energy's performance in the comments below. Until next time.